let's tackle the clearing and settlement system. But first, let me introduce myself. I'm Erica May Harnelia from BSBA FM Section E, the first reporter. So, hello! In clearing and settlement systems, the banks of the payer and beneficiary exchange information regarding monetary transfers. The result of this exchange is payments between banks. Clearing and settlement clearing refers to the transmission and reconciliation of payments orders and the establishment of the final positions to be settled. Settlement is the event that actually carries out the obligations. The respective debating and crediting of the accounts of the parties to the transaction. The integrity of the global financial system relies on the proper accounting for each transaction that takes place in the system. Therefore, stability depends on the reliability and accuracy of the clearing and settlement system. Clearing and settlement system may settle on a gross or a netting basis. Gross settlement is when the settlement of funds or securities takes place individually, one transaction at a time. Netting is when large numbers of individuals' positions, both credits and debits, are netted together into smaller batches for processing so that settlement takes place at specific times during the business day rather than on a continual basis. So, let me walk you through the settlement types. Settlement types. Payments can be on gross basis, where each bank pays the total amount owed. Payments handled through a gross settlement system are more likely to have a requirement for immediate execution, where payment instructions are processed separately for each individual transaction. There are payments can also be on a net basis, where a large number of transactions are accumulated and offset against each other, with only the net differential being transferred between banks. There are three main types of clearing and settlement systems. First is retail systems are responsible for the processing of small-scale financial transactions, while there is no globally accepted definition of small scale. It often notes individual transfer of less than 1 million. Second, large value systems are responsible for the clearing and settlement of larger transactions. Third, security systems handle the clearing and settlement of fixed securities such as common and preferred stocks, bonds, and other types of instruments. Payments handled through a net settlement system usually wait until the end of the day, when all transactions between the banks are summarized and offset against each other by a clearing institution. The clearing institution then sends the net transfer information to the settlement institution, which executes the transfer of funds between banks. The general concept of clearing and settlement is for the banks of the paying party or the payer and the receiving party or the beneficiary to exchange information regarding monetary transfers, resulting in the transfer of funds between the two banks. The banks in turn debit the account of the payer and credit the account of the beneficiary. Given the massive volume of such transactions, formal clearing and settlement systems have been installed to streamline the process. In banking and finance, clearing denotes all activities from the time a commitment for a transaction is made until it is settled. Clearing is necessary because the speed of trade is much faster than the cycle time for completing the transaction. In its widest sense, clearing ensures that trades are settled in accordance with market rules. Even a buyer or seller should become insolvent prior to settlement. A key requirement for successful payment completion is sufficient liquidity on two levels: the payer and the payer's bank. In payment processing, the term liquidity refers to the availability of funds for making the transfer. In order to reduce credit risk, real-time liquidity checks are becoming the norm of the levels of at both levels. Banks' liquidity positions depend on the outflow and inflow of the payments.
Hello everyone, I am Jonabel B. Horayan. The topic that I am going to discuss is all about transaction types and automated clearinghouse. My first topic is transaction types, which is FeedWire. It refers a real-time gross settlement system of a central bank money used by the Federal Reserve. It means that participants originate funds transfer by instructing a Federal Reserve Bank to a debit funds from its own account and credit funds to account of another participant. For example, the FeedWire funds service opens for Monday at 9 p.m. on the preceding Sunday. Electronic banks. It includes an overdraft system that covers participants with existing and approved accounts. It means that electronic banking used for computers and telecommunications to enable banking transactions to be done by telephone or computer rather than through human interaction. Its features include electronic funds transfer to retail purchase, automatic teller machines, and automatic payroll deposits and bill payments. Last is FeedWire system. It is an electronic funds transfer system used by banks, business, and government agencies for large same-day transactions. So, participants originate funds transferred by instructing a Federal Reserve Bank to debit funds from its own account and credit funds to the account of another participant. It is important of the feed-wire system is processing trillions of dollars daily among its members. This is the example of feed-wire system. My second topic is automated clearinghouse. The automated clearinghouse network is an electronic funds transfer system run by NACHA, former called National Automated Clearinghouse Association, since 1974. This payment system provides ACH transactions for use with payroll, direct deposits, tax refunds, consumer bills, tax payments, and many more payment services in the U.S. And recent rule change, change, changes are enabling most credit and debit transactions made through the ACH to clear on the same business day. The next is Network NACHA. It's a self-regulating institution and it gives the ACH network its management, development, administration, and rules. Uh, NACHA operates one of the major networks that carries electronic financial transactions between banks and payment service providers, and it is there responsible for the rules and standards that are used to move money between accounts held at various types of financial or payments companies. And the last topic is SCH network. It is an electronic system serving financial institutions to facilitate financial transactions in the U.S. The SCH network essentially acts as financial hub and helps people and organizations move money from one bank account to another. SCH transactions consist of direct deposit and direct payments, including business-to-business transactions, government transactions, and consumer transactions. That's all. Thank you.
Good day everyone. My name is Danica V. Hakalan. I am a financial management student. So my topic for today is all about treasury system. So the treasurer requires information that is not normally available through a company's standard accounting system, or even from its enterprise resources planning ERP system. Even though an ERP is designed to aggregate all of the informations used in a modern corporation, the treasurer also requires information from a variety of external sources regarding investments, foreign exchange position, interest rates, and so forth. Consequently, treasury systems are needed to integrate information from a variety of sources, yielding real-time information that the treasury staff can use to efficiently perform their task. Treasurer's technology needs. So the treasurer is in the difficult position of requiring information from many sources, most of which are not required by any other company manager. Since Treasury is a relatively small department that may not command the resources of larger departments, it can be difficult to collect all of the required information. So, ang role sa Treasury Department is sila ang mag-manage or oversee the management of financial affairs of the organization, often including such basic tasks as selecting a bank, reconciling bank statement, and managing cash flow. So, naadya pon sila gamit, no? Kay sila man ang mag-manage sa cash flow sa ilahang company. Consequently, the treasurer must frequently prioritize information needs, while priorities may vary by company. The following list establishes a reasonable set of priorities in declining order. Number 1 is cash position. The treasurer overriding obligation is to ensure that the company has adequate cash to fund its operation. Thus, the following technology needs is critical. 1 is cash book balance tracking. 2. Multi-bank reporting of balance information. 3. Cash pooling management. 4. Cash forecasting and reconciliation of actual to projected cash flows. 5. Funds transfer capability. 6. Investment management including money market dealing. 7. Interest income calculation. 8. Debt management. 9. Interest expense calculation. 10. Payment processing. And 11. Intercompany transaction settlement with national accounts. So, si cash positioning is very important in the company because it represents the amount of cash that a company investment fund or a bank has on its books at a specific point in time. The cash position is a sign of financial strength and liquidity. So kung ang isa ka company is financially stable and kaning financially stable, so ang mga investors maingganyo pod sila og invest sa ilaha. So for trader and investors, the cash position refers to the portion of their investments portfolio assets that reside in cash or cash equivalent. So, a stable cash position is one that allows a company or other entity to cover its current liabilities with a combination of cash and liquid assets. So, ang company nga ang ilang cash position is strong. So, ang mga investors maka-assure sila nga ang company is makabayad sila maski naa sila yung mga liabilities, no? So, positive cash flow indicates that a company's liquid assets are increasing. This enables it to settle debts, reinvest on its business, return money of shareholders, pay expenses, and provide a buffer against future financial challenges. So, cash position is very important in every company. Number 2 is foreign exchange transaction. Some companies have so little foreign business that foreign exchange transactions are negligible. But larger firms with established treasury operation will likely need the ongoing purchase and sale of multiple currencies. Thus, the following technology needs to arise. So the first one is rate feeds from Bloomberg or Reuters. Number 2, intercompany netting. Number 3, foreign exchange forecasting and position analysis. Number 4, foreign exchange bid summarization. Number 5, foreign exchange deal-making capability. Number 6, foreign exchange confirmation processing. So, in foreign exchange, there is sila magkaning murag like kanang ang isa ka product i-import nimo siya ay i-export nimo siya sa lain, murag import export exchange of goods and services. So ang example ana is atong currencies. So for example, naakay kanang relative nga nagtrabaho sa laing nasod unya, kung magpadala siya na siya higher currency kaysa diri, so kana siya. So using currency exchange rate forecast can help brokers and business make informed decision to help minimize risk and maximize returns. So ang investors pod magtan-aw sila sa kaning exchange rate forecast para makabalo sila if mag-invest if maka-minimize ba sila sa risk or maka-maximize sa returns. And lastly, number 3, hedging. For those companies that elect to hedge their interest rates or foreign exchange position, consider the following technology requirements. So, rate feeds from Bloomberg or Reuters. Number 2, exposure modeling capability. Number 3, hedge deal making capability. So hedging in finance means strategically using financial instrument or market strategy to offset the risk of any adverse price movement. Put another way, investors hedge one investment by making a trade in another. It also provided means for traders and investors to mitigate market risk and volatility. It also minimizes the risk of loss by hedging. So, market risk and volatility are integral part of market, and the main motive of investors is to make a profit. So by hedging, ang mga investors makabalo sila kung kani siya nga kung ang ilang investment is at risk or dili. So it's also important in treasury system. That's all, and thank you so much.
Good morning, everyone. I am Magmanuel Jaya Grace Lakia, reporter major in financial management, section E. Efficiency issues. Minimize data entry. The system should never require the manual entry of a transaction into the system more than once, and preferably should involve automated data collection and posting so that no manual entry is required at all. Like for example, if you run an organic dairy farm, it would never be efficient to give your cows daily antibiotics because this would make your milk non-organic and effectively lower your output to zero, no matter how much was the actual milk produced. Now, if we put it in a business, no matter the how inspired you are, without efficiency in doing your task, then it's nothing. Workflow processing. If supervisory approval is required, the system should electronically route the pertinent transaction to the correct supervisor approval. Potential issues. Audit trail. All treasury transactions should result in a clearly defined audit trail that identifies who made a transaction and the date, amount, and accounts impacted by the transaction. Separation of duties. The system should limit access to certain modules and require approval of key transaction. Warning indicators. The system should automatically notify users if transactions and confirmations have not been received, if hedging policies are being violated, if there are negative cash balances, and soon. For example, you deposit money in a bank and the bank didn't receive such amount of money. Then the bank automatically confirmed that there is no such amount received by them.
Next is Treasury Management. It is a systems involved the creation and governance of various procedures and policies designed to help companies better manage their cash flow and all the aspects that go with it, such as payables, receivables, interest rates, and sovereign exchange rates. Managing cash well is crucial for business of all sizes. Even the most profitable businesses can fail if there is insufficient cash on hand to cover bills and other financial obligations. Treasury management services in banks like liquidity management, fraud, receivables, information, disbursements, FX risk management, and digital treasury services. Managing cash well is crucial for business of all sizes. Even the most profitable of businesses can fail at bills and other obligations. Yes. Through treasury management, companies are better equipped to monitor the amount and timing of cash flows and outflows. It is also the role of treasury management to extend the time needed for a company to retain the money needed for bills and to reduce the time it takes to receive money from customers. Treasury management is the efficient management of liquidity and financial risk in a business, and their action to manage this risk will vary as their nature changes over time. This policy is designed to provide a clearly defined risk management framework for those responsible for treasury operations. Next is the key